Good morning and welcome to this Monday, October 18th, 2021 edition of Trading Places Live at earningsbeats.com. I'm Tom Bowley, Chief Market Strategist here at Earnings Beats, and I'll be your host for the next 30 minutes, featuring everything you need to know as you prepare for the trading day ahead. Well, we've got futures down a bit this morning. Let me see what I got here for you last thing I showed, of course, is a few minutes ago. Dow futures down 170, S&P futures down 22, NAS futures down 72. Another way that I like to look at it, if you go over to over to stock charts and you hit the drop-down menu, the symbol summary, you can get a real time on the QQQ or the spider. So right now, the QQQ down $1.58 or 0.43%. And the spider down $2.34 or 0.52%. One thing I've talked about often is that the worst day of the month is the Monday that follows options expiration, and that's today. So we have to kind of be aware of that. Now, this month was a little different than most months in that the market has not really had a big run. We did rebound last week, but for the most part, since the beginning of September, we've been trending lower. So there's not quite the same kind of pressure, I would think, to the downside that we might see most months. So that may impact things a bit, but still, it is the Monday after Friday options expiration, and we are seeing futures down at least at this point. Got a couple things to talk about here. First, I just want to mention a couple of things. Let me show you the Earnings Beats site. So for those of you who are new to Earnings Beats, if you go over to earningsbeats.com, love to have you scroll down, sign up here for the free EB Digest newsletter. All it takes is your name, email address, hit that subscribe button. It's a newsletter that I publish 3 times a week, Mondays, Wednesdays, and Fridays. We tend to get those out probably about an hour before the market opens, generally speaking. And it's just an opportunity for you to learn a little bit more about how we look at the market and hopefully provide you some tips, some educational things, also some tradable ideas that you may consider to take advantage of if you so choose. But one of the benefits of being a free Earnings Beats Digest subscriber is that we have free events from time to time, and we just had a huge one on Saturday. And so I just wanted to point out ChartFest 2021. If you missed it, if you go into our website and you click on this ChartFest 2021 link, you can still go in and listen to the recording. So it's still there. Also, look at all these shared chart lists. I was really happy to have Grayson Rose, who's Stock Charts Vice President of Operations, and then Dave Keller, who is the Chief Market Strategist at Stock Charts, and also is the host of The Final Bar. That's their flagship Stock Charts TV show. That's every day at the end of the day, right at 4 o'clock Eastern. But both of them joined me. Not only did they give a great presentation, but they've also provided some excellent lists of the way they organize things at Stock Charts and the way they look at the market. And so I think this is tremendous value. I've also shared a few of our chart lists, a lot of the research that we do, short squeeze chart list, strong earnings chart list. This is what I would consider our flagship research chart list, is our strong earnings chart list. And then also our raised guidance chart list. So as you look forward, companies that are going to be coming up for earnings, it's nice to know which ones raised guidance during the quarter. And then finally, the 3 bonuses that we each gave, 5 stock picks or 5 stocks worth watching. But I mean, look at all the different chart lists that you can get. So if you're a stockcharts.com member, at least extra or above, extra service or pro service, or I guess just those 2 services, you can download all of these into your account. Now, if you're a basic service member over at Stock Charts, you only get 1 chart list, and that's your default. So you're not going to be able to download these. Or if you're not a member at Stock Charts, obviously you're not going to be able to download them into your Stock Charts account, but you can view all of them. So for instance, if you just go in and click on this weekly market rotation you can click on how Grayson has set his different charts up and just scroll through them. Pretty cool. And if you do have an account, you can download certain charts, or if you want to download the whole list, you can just go in and hit this save to chart list. And then when you do that, it'll ask you, is this a new list? You merging it with another list, you're replacing a list. Obviously, you don't have Grayson's list in your account probably, so you're going to be doing a new list. And then you just number it however you want. It's very simple, but I just wanted to point out that this is there for all of you. I think it's just a tremendous gift that they provided everybody. And so, make sure you take advantage of that. And again, just being an EB Digest or being an Earnings Beats community member got you into that event. We sent out room instructions, and really was a great session. So no credit card required, by the way, and you can unsubscribe at any time. So we'd love to have you. Also, if you'd like to try out our service at Earnings Beats, we have a 30-day no-cost trial. So you can click on this, start a 30-day trial. So if you want, you can get us both, stockcharts.com and Earnings Beats for 30 days, no cost. And then you can see exactly what I'm talking about and hopefully experience the way that, we use, or at least at Earnings Beats, the way we use the Stock Charts platform, which I think is powerful. The other thing I'll mention too is if you do try us for 30 days, you can see one of the things that we do is we provide portfolios. We have 4 stock portfolios. We also have an ETF portfolio, and we show our history. I think if you look over the long term, you're going to see some pretty impressive numbers, each of the portfolios since inception. And then you can compare that to the S&P 500 since the inception of the portfolio. So you can see, for instance, model portfolio up 209%. Over that same period, the S&P up 66%. And so you can check them all out. I think we do a pretty good job overall. Tomorrow, we actually have our next draft on the ETF portfolio. So every 90 days, we essentially start over again. We take whatever's in the portfolio and we put, well, in the case of the ETFs, we may put 6 ETFs in here. We might put 10 ETFs in here. Still kind of deciding what we want to do there. But the idea is for the stocks, we equal weight 10 stocks in each portfolio. In the ETF, we assign weightings. And to date, we haven't put 25%. We haven't put more than 25% into any particular ETF. So not only do ETFs provide you some diversification, but then when you start just putting in 25% into each or less, that helps to balance out your portfolio as well and diversify. Anyway, that's coming up tomorrow, the ETF draft for our model ETF portfolio. And then the other thing that we have for later today, we have Q3 earnings. So last week we showed a sneak preview. That was a public event where you could come in and kind of get an idea of what we do when we look ahead to earnings. But now tonight, what we're going to do is actually for members only is take a look throughout the next few weeks and try and pick out some of our favorite earnings reports, those that we believe are going to post some great numbers based on the way they've been trading relative to their peers, relative to other stocks, and then also provide you some of the stocks we don't like heading into earnings. So I think it'll be a great event. We always get a lot of positive feedback from this event, and it is tonight or this afternoon at 4:30 Eastern. But you do need to be at least a trial member. You don't have to be paying, but you have to be at least a no-cost trial member. But if you sign up, you'll be able to come to that session at 4:30 today. All right, sorry for the long introduction, but had so much going on and things I wanted to make sure everyone was aware of. Let's take a look at what happened on Friday. Dow Jones Industrial Average up 382 points, S&P 500 up 33, NASDAQ 74. But mid caps and small caps lagged. We did see mid caps get up close to a breakout. A lot of weakness into the close, though, on a lot of stocks. It was kind of a strange end of the day on Friday. Some stocks kept going up, others started to roll back over. But anyway, you can see mid caps finished with just a very slight gain. Small caps actually moved into negative territory after they were trading at about a 3.5 to 4 month high. on an absolute basis. So small caps were trading very strong, but we did have a little bit of a weak finish on Friday. And with futures showing that maybe we're going to open lower this morning, we'll see whether or not the bulls can get back into gear. Looking at the sectors, discretionary, and I've been saying this is one of my favorite areas of the market. I know energy's been on fire, and energy tends to go through these boom or bust periods. Discretionary can lead for an extended period of time. So when I see discretionary making breakout and also leading on a relative basis, that makes me feel pretty good about the group as we go forward. So I think discretionary is going to have a strong fourth quarter. We shall see. Financials also strong on Friday, up about 1.5%, breaking out to new highs. I think financials continue to look strong. Industrials really beginning to pick it up. I've been waiting and waiting and waiting for this group to finally catch fire and start moving, and I think we're now doing it. Transports had a big last couple of days of last week, and that helped to spur the industrials higher, getting back through the 50-day. I think we're going to make a run back up here to about the 105, 106 area. Technology also up on Friday about 4/5 or 8/10 of 1%. Breaking back up above key moving averages. That's really important because this is 24%, over 24% of the S&P 500 and a lot more than that of the NASDAQ 100. And as a result, when this starts to strengthen, it really helps to strengthen the overall market. So this was good action on technology. Watch for possible neckline up at that 157 level. If we do get stronger later today, we'll see. Utilities, the weak link on Friday, finished down just a fraction. I think utilities and consumer staples were the worst. Also, communication services, which has been struggling since the beginning of September, also weak on Friday. Those were the 3 sectors out of the 11 that were actually down on Friday. All right, moving on to the 10-year Treasury yield. Let's get an update here and just see where we are. Moving up. This is going to be good for financials, for banks, for life insurance companies, probably also for the industrials. This is a chart that I like to show with the 10-year Treasury yield. These are 2 areas of the market that tend to do well when the yields are on the rise. That is the financials. So this is a chart of financials relative to the S&P 500. You can see when we started moving here, so too did the relative strength in the financials. And then also industrials. So we've been moving up, but to a lesser degree. This might start to pick up though. Transports, industrials love the month of November. That's all I'll say historically. So that doesn't guarantee us anything, but I just know seasonally there's a tremendous push tendency anyway for these groups to move back to the upside. I'm talking about the industrials, transports, that sort of thing. So anyway, with interest rates moving up right now, it just means probably more rotation into financials, into industrials, and probably rotation out of areas like technology, some consumer discretionary, and definitely the communication services, which has been going through a little bit of a correction here of late anyway. As far as economic reports out today, we've got September industrial production expected to rise 0.2%. August rose 0.4%. So we are looking for a little bit of a slowdown there. September capacity utilization, in August, it was 76.4%. We're looking for a slight increase to 76.5%. October housing market index expected to come in at 75. September was 76, so a slight drop there. We have a couple other housing reports out later this week. Housing starts and building permits will be out tomorrow. And then we have existing home sales on Thursday. So home construction, home builders, that sort of thing could be in the spotlight throughout the week. So keep that in mind as these reports come out. Let's see. How about we move on to talking technically? So talking technically, I wanted to go through and just show you the main areas that I'm looking at that I've been talking about. So S&P 500 been moving higher, going through a period of correcting prices. And you can see here, I think we're in an inverse head and shoulder pattern, potentially. Maybe it's a cup, but we got to move down. This is the ABC correction. Actually, let me shorten this a little bit so we can see it a little bit better. Hopefully you can see this pattern a little bit better now. So here we are. This is what I consider the A of the ABC correction. Then you get the bounce, which is B, and then you put in one more low, which is C. And now we're starting to move up again. So this is what we were talking about during the period of weakness in September into early October. I think it's ended. I don't believe we're going back down to these lows again. I believe instead we're going to go to new fresh highs. But potentially this could be the left shoulder, the neckline, the head, and then the right side of the neckline before, with futures down this morning, maybe we're going to pull back and put in a right shoulder. Maybe we go down to the 20-day. Maybe it's very brief. And if it is brief and we move up, maybe it starts to take on more of the shape, more of a cup shape than the inverse head and shoulder pattern. But still, nonetheless, this is this was good news at the end of last week to get back through these moving averages, because if you're going to trend lower, then typically what happens is you fail at this 20-day EMA. We saw that when we had that B move to the upside, came back, printed the C, and when we went back up, it looked like we were rolling over, but we held the low, and now we're starting to turn back up through these moving averages. Next step, be getting that daily PPO back above the zero line. I think that's coming. And so overall, I think, things are definitely starting to look up again. If we pull up the NASDAQ 100, we don't see quite the same. We haven't gotten back up to where a neckline would print, but we have gotten through the 20, and now we're testing the 50. I just think the reason that it's underperforming a little bit is right now we've got yields moving up again. And so when yields are moving up, growth stocks in general are going to, on a relative basis, probably not do as well. And that's what's going on. Now, longer term, I think we're going to go through periods where we see the yield move up, then we'll pull back, consolidate. I don't see the yield just absolutely soaring. Maybe it happens, but I don't think that's going to happen. I think we'll eventually get back up on the yield. If I'll go back over here to that chart, I think eventually we're going to get up here and test this March high around 175. That's what I would expect on this move. Then I think we'll see some consolidation, sideways action, and probably a return more to those growth stocks when that happens on a relative basis. Now, I think if the market goes up, we could see everything going up. I don't expect that we're going to see a huge sell-off in growth-related stocks, but we probably could see them take a back seat in terms of gains if we continue watching the yield move. So that's something to keep in mind. All right, so let's watch that 50-day. Let's watch the B, that reaction high on that ABC correction right there. And let's see, whether or not we can hold the 20 on the pullback or whether we go through this B high. That would be the key for me on the NASDAQ 100. All right, Tesla, I wanted to point out, they report earnings on Wednesday. And what's interesting about Tesla, and I've written about this and talked about this in the past, Tesla is one of those stocks that has a history of running into their earnings reports. And this quarter has been no different. We are making a huge run. I saw Tesla, even with futures down. Let me see what Tesla is doing right now. It was up in pre-market. It's up $7. So the market's going down. Tesla doesn't care. Tesla continues to move up. So we are making this run. The number to watch on Tesla is that close, or actually the open back on January 26th. That marked the candle body high. And that's what I look at, candle bodies, which include closes and opens, not intraday. But I'll give you the intraday high in just a minute. But the candle body high was 891.38. I think we're making a run for it right now. Now, the intraday high was 900.4. So for those of you that follow intraday moves, that would be the level you want to watch. But if we close back through 891.38, that would be a very bullish development for me for Tesla. But I see it going higher. This is a stock I've been high on for a long time, a very long time. And it's a stock that actually has helped us in our portfolios over the last year or two because of the huge run that the stock made previously. Also up with earnings, and I think they report tomorrow. I think, let me just double check. Yeah, tomorrow after the close, Netflix. Talk about another company making a run toward its earnings. This was a stock that was trading down at 510 back in the middle part of August. Now here we are 2 months later, and we're at 628. So the stock has run up about 120, probably almost, well, probably close to 25%, 23, 24% in 2 months heading into its earnings report. So Wall Street is definitely putting money into Netflix. I think you're going to see either a strong report or strong expectations, maybe raising guidance. Something seems to be brewing here with Netflix based on the way the stock's trading. And this is what I'm going to be doing later today during that Q3 earnings webinar at 4:30. Again, you need to be a member for that. But I'm going to be taking a look at a lot of the companies that I believe are setting up for big earnings reports coming up. And I think Netflix is one of those, and we're going to find out tomorrow. All right, let's see. What else do we have here today? One thing I wanted to do was go over here and take a look at the scooter reports. So if you're not familiar with the scooter reports, scooters are nothing. It's just stock charts technical rank. So it's an acronym. So that right there is just stock charts technical rank. So don't be thrown off by seeing SCTR. It's a formula that was developed by John Murphy. He looks at, I think, how far away the stock is above its moving averages, the rate of change over certain periods. So it's momentum, but then it's ranked against peers. Well, really against asset classes. So if you're a large cap stock, you're ranked against other large cap stocks. So that's why the scooters here for the large cap, you can see them in order. So right now, Upstart Holdings has the highest rank. Now, does that mean it's the best stock? No, it just means based on the formula for the stock charts technical rank, the scooter, it has the best ranking. There's a limitation on the scooters that I always like to point out. Every indicator, everything you use has a limitation. So you have to understand the limitations. The limitation on the scooter for me is that, number one, it's based on just a couple of momentum indicators. It doesn't use all the indicators at stock charts. So we, could have picked different indicators, which obviously would have ranked everything differently. But the biggest one for me is that all the formulas, nothing really goes back past about 5 months or so. So anything that happened in the charts prior to 5 months ago is not included in this. So if you're looking for a stock that you think has a long-term, great long-term potential because it's done so well in the long term previously, the scooters are not what you want to look at because this is only going back 5 months. So if, for instance, energy, a lot of energy names are now at the top of the list, but energy for the last 10 years has been horrible. But for the last 6 to 12 months, energy's done extremely well. It's been the best performing sector. So you're going to see a lot of energy names at the top of the list, but you could pull up long-term weekly charts, 10, 15-year weekly charts, and they're going to be some ugly charts. Now, I don't know if let me just pull up one of these here and just see if there's your year chart. Now, I have no idea whether this is going to be, well, you can kind of see it there. Let's go out monthly, 15 years. And you can see the stock here is still another $27 away from its all-time high, which was set back in back in, looks like maybe August of 2014. So you look at it, you might, see the scooter score and say, wow, this is a great stock. And maybe it is. Right now it is for sure. But, you look at this stock versus, say, we could look at Tesla. We could look at Apple. You see the difference? So Tesla's doing well, but Tesla's been doing well for a long time. Apple been pulling back a little bit of late, but look at the long-term track record. So that's the difference I just wanted to point out with the scooters is that you do have one limitation in it. We're only looking at what a stock's been doing for the past 5 to 6 months. All right. The other thing I wanted to do here, I was going to select my 3 you must see. I was just going to randomly look at the mid-cap stocks, and then I'm going to get this change in scooter, and I'm going to take the highest changes over the last week. I'm just going to pull up whatever comes up as the top 3. Materials, technology, and technology. So we have MP, we have Zuo, and we have BlackBerry. So those are the 3 I'll use for the 3 and 3. I haven't looked at these charts, although I am very familiar with Zuo. I like the stock a lot. But let's go through first and talk a little bit about earnings. So later today, as I mentioned, we're going to go through and take a look at the Q3 earnings that are going to be coming out ahead. And also I'm going to be pointing out which earnings I think have been the strongest so far. I mean, we're just getting into earnings season now, but we've had a few large companies report, mostly in the banking area. Which companies have been reporting great results? Which companies should we be thinking about buying on pullbacks over the next week or couple of weeks? And that's what I'm going to talk about in addition to solid upcoming earnings reports. Today, State Street, STT reported earnings this morning. They beat estimates $2 versus $1.92. You can see the stock up testing that key resistance. So we really need to get through the candle body high of 93.94. That was the open back on August 30th. Now, one problem I have, and this is not a primary indicator, but a secondary indicator, look at that AD line. So yeah, we've been going up, but the AD line's been going down. A lot of this volume has been on these down days. And then, when we get lesser volume, we get some, a couple of up days. So the AD line has not been strong, but we did beat on the top line. So then the next question is, well, what's the market's reaction this morning, pre-market? And with about 4 minutes to go to the start of the market, you can see State Street is down a little bit, even though we had that solid number. I think based on the fact that we're at resistance, and I'm going to go back here again, let's take a look at the relative strength. So we've seen, and this is, by the way, Asset Managers Group. I think I was talking banking earlier, a lot of banks coming out, but State Street is in the Asset Manager Group. And relative to the Asset Manager Group has been doing better of late. And the group's not bad. It's been going mostly sideways for the last 5 weeks. But it has weakened here just before the earnings report. And again, we need to get this breakout. So from a relative basis, it's okay. But from a purely a price basis, we've got to get through this resistance area. And until we do, I would be looking elsewhere. So that's just one company reporting. Then we have ACI, which is Albertson's company. They reported this morning and easily beat estimates, 64 cents versus 45 cents. It had been really on fire in terms of its AD line and price action until about a month ago, and we've been seeing a pullback. Now, I think that this is an opportunity. I have not looked yet to see what's going on pre-market, but I think this pullback presents an opportunity. But let me see what we're doing here in the pre-market. ACI up $1.11, so 29.67. That will take us through the 20-day. I'd like to see us hold the 20-day as we go forward. I certainly want to hold this recent low and this gap support level. So I'm going to say 26 is a level that I would watch really closely on ACI. That's where the volume came in on this huge gap up and run back, looks like second week of August. So I wouldn't want the stock to close back below 26. That's where I'd be watching. Other stocks coming up later today, we've got Steel Dynamics, STLD after the close today. Steel Group been very strong, but did take a period took a period off. You can see steel's been pulling back for the last 2 months. This was one of the groups I wrote about, and it was probably about 2 months ago. I thought we need to be really careful. I'd take profits, get out of it. And we have pulled back, but now we're starting to turn back up again. And Steel Dynamics is reporting after the bell today. This is going to be a very, very interesting report. I think we are in a potentially head and shoulders pattern, shoulder, neckline, head, neckline, right shoulder. So if earnings come out and for whatever reason, the market sells off, you want to watch 55 to the downside. Otherwise, if it continues moving higher, then I think 72, 73 is an area we want to watch. That's the trading range, pretty wide range. And we're sitting pretty close to the middle of it right now. So we'll see what happens later today when the earnings come out there. Other companies reporting tomorrow are J&J, Johnson & Johnson, Procter & Gamble, Netflix, as I mentioned, Intuitive Surgical, Travelers will be reporting tomorrow. Kansas City Southern, a railroad starting to move, as I mentioned, the transports. And so anyway, a lot of companies coming up. Halliburton will be reporting in the energy area. So lots of companies, and we'll talk about more of that later today at 4:30. All right, those three you must see, and I'm running just a little late, so I'm going to go through these very, very quickly. But let's pull these up. First one is MP. And on a relative basis, MP just kind of going sideways. So I'm surprised it's making such a big run in the scooter score. But MP not really doing a whole lot here. And I'm looking the group. I mean, it's just not something I'd be interested in. So I'm going to pass. Zuo's in the software space. This is one that I really do like. I love this breakout. Look at the AD line confirming. The software is breaking out on a relative basis. Software is breaking out. Zuo is at a almost 4 month relative high versus software. Volumes coming in. I mean, there's really not much not to like here other than the fact it's been going straight up. So I'd like to get a little bit of a pullback here. Get an update, just see where we are quickly. Yeah, right now 1970. Actually, that's Friday's close. One last stock we'll look at before we wrap up here. BlackBerry. So BlackBerry currently going sideways. This is another one why I'm not quite sure why the scooter has moved so much in the last week. I mean, we did go up here, but I wouldn't think it would make a huge move. But I guess maybe some of the shorter term formula pieces probably went up as a result of this move. But you know, BlackBerry, I see support down probably at around 9.25. Resistance, we got to get through 11, then we got to get through 12. Then maybe you could really start to run. But right now, where it is now, I don't really have any strong opinions. All right, let's get a quick update on the market, see if we're still down. Then we're going to wrap up. Sorry, I ran into the open here. But let's get a quick update. All right, right now, Dow Jones Industrial Average down 151, S&P down 17, NASDAQ down 49. And from a sector perspective, which is where I like to start the morning, energy, I didn't even mention energy, by the way. When I looked this morning earlier, $83 a barrel. I probably should have been talking a little bit more about that. Another big move up in energy. So we're seeing energy doing well, but really nothing else. Consumer discretionary holding its own, even though the market's selling off. Part of that's going to be Tesla, the second largest holding of the XLY. To the downside, we've got utilities, materials, healthcare, got a little bit of pullback in industrials, technology, consumer staples, so forth. So a little bit of weakness today, energy helping a bit along with consumer discretionary. All right, that's it for me. I'll be back later today for that Q3 earnings webinar. If you'd like to attend and you're not currently a member, I would encourage you to sign up for a 30-day trial. We are not going to let you forget about it after 30 days. We will remind you before your 30 days is up. We are not just going to charge you. You know, if you've forgotten about it, we'll remind you to see if you really want to stick with what we do at Earnings Beat. So check us out. Sign up for that 30-day trial. We'd love to see you later today. And then, of course, tomorrow we'll have that model ETF draft tomorrow at 4:30. Again, that's members only. Tomorrow morning at 9 a.m. is your next Trading Places Live right here. Stock Charts TV. Just click on that at 9 o'clock. Come right in and check out the show. Everybody have a great day. And hopefully I'll see you tomorrow and maybe even this evening. Happy trading, everybody.